Hello, welcome to today's stream for the last day of our trading congress. Today we're going to be discussing decentralized exchanges. You've traded on maybe you traded on Coinbase, you traded on Binance, maybe you've traded on FTX. But with with all these regulations, a lot of people are turning to decentralized exchanges. So we're going to talk today about what they can do, and about the future of how decentralized exchanges are going to change the way you and I, and how it's going to change the way everybody's going to trade. Before that, a short intro. All right, welcome back. I'm Crypto Penguin, joined by my co-host Aperture. Hello, Aperture.
Hey, hello. I'm looking forward to seeing what Polkadex is actually developing here.
Yes, speaking of Polkadex, we're joined by our guest, Vivek Prasannan from Polkadex. Hello there, Vivek.
Hi, David. Hi, Michael. Nice to be here.
Just before we get started, could you just briefly introduce yourself, who you are, how you got into blockchain and crypto and that kind of thing?
Yeah, sure. Okay, so I'm Vivek Prasannan. I'm the executive director of Polkadex. I'm a computer engineer. I started my career by starting off an IT consulting firm 20 years ago. So I was in the consulting business for close to 15 years before I started looking at products. And I came across Bitcoin in 2013. And ever since, I've been an investor and also researching and a lot on the decentralized exchange space, right from 2013, based on certain experiences I had in exchanging tokens. And here we are. I think it's an iteration of several attempts and failures. And finally, we have reached a point where the technology is mature enough to actually give you the kind of experience that we were looking at, from a decentralized exchange.
So since 2013, right? You've
been
here since 2013, right? So maybe you can go through the history a little bit then for the people in the audience who maybe have just started trading. Could you go through like how decentralized exchanges first started? Like, I mean, my earliest experience was Ether Delta. Did you trade their Aperture at all?
No. I think even before that, even before Ether Delta came, there was quite a few of the attempts for creating a decentralized exchange.
Yeah, that was my earliest experience. So no, I'm sure you've been in here longer. So yeah.
Right. So I think the first set of discussions happened in. I've said this several times. Some of the listeners may be getting too bored with this same story again, but I can go over once again if you want. Most of the discussions used to happen in a forum called the Bitcoin Talk. That's when I came about understanding that there was this counterparty risk, which was kind of keeping things in check as far as the exchange of tokens are concerned, right? Even though Bitcoin is designed for peer-to-peer cash experience, there was clearly a missing piece of exchanges getting hacked back then, because that's about the same time that MTGOX, the first major hack, happened in the crypto industry. So that's what prompted everyone to think that, okay, there's a problem here which needs to be addressed. So naturally, there were discussions about how to mitigate this counterparty risk. And the first formulation of that was to create an asset that will be pegged against the value of tokens that is being exchanged and is held in a contract in the blockchain by either issuing those assets or through. But the smart contracts were not very highly developed as we have right now with Ethereum and all this stuff. But the first one I came across was BitShares. Okay, so
BitShares.
I think BitShares. Yeah, there was a paper by Dan Larimer, which he exited after I think a year or so. He went on and started EOS after that. So BitShares was my first experience with the DEX, and I was really fine with the kind of experience that BitShares gave, because it had one of the fastest confirmation times on a blockchain network back then. and they were the first people to actually bring about distributed POS, right? Distributed proof of stake mechanism. So there's a paper by this guy named Dan Larimer, and so that got us interested in getting to know it, using it, and then we realized that okay, there were some problems, and it includes the speed of transactions and the way it is operated, and how the consensus was actually made on the network, the control of the network, how it is maintained over a period of time with the amount of tokens that you hold, the voting mechanism. There were several things that were, had to be fixed or addressed at that time. And I think BitShares went through a lot of iterations over the years, but I have really not followed for the last couple of years, I must say. But my first attempt was actually on BitShares, to do something like this. But it did not work out. But I think people were really experimenting with a lot of things. And since Ethereum had all the limelight and marketing and the backing that it needed from the entire spectrum of technocrats, I would say, and also the corporates were behind Ethereum when it first launched. And so it had more exposure than BitShares, I must say, in terms of general awareness. So that's why Ether Delta became the first one that most people know now. So Ether Delta was also cool, but when you look at the the transactions took at least 10-15 seconds to confirm, and that's something which held back the kind of experience that we needed for an exchange. So since I used to I started testing my own mining back in 2013 with I started with 44 gigahash just to try it out, and then I upgraded to 1 terahash back then. And there was a company called KNC Miner. It's no longer there. So it's a Swedish company. So that's when I actually tried to know how this thing worked. And ever since then, many of us were very clear that how this industry was going to evolve over a period of time. And there was so many issues that needs to be resolved. If this thing had to be reaching to a point where, either your friends or your family members or somebody who's less experienced as a technology person is able to use it. So so that's how it all began. And now we have tremendous improvement in technology and some great minds working behind it. And as an entrepreneur and an engineer, I always look at the improvements as a way to how to leverage or how to connect the dots and make something useful for people, right? So that's been the motivation behind Polkadex. And at the right time, I got the right team where Gautam and Dipansh, my co-founders, were also working very closely with these kind of technology. Like they were working on a consensus algorithm, which was very much in line with what we wanted. So we came together and we put together a vision, like to create something useful for people, like an application plus an application that is actually built from the scratch to support something like this, right? Instead of relying on an existing blockchain. So Polkadot was a perfect, tool that we came across to build something like this. It's more flexible. It's like basic system level Rust. So you had all the control. I think Gavin and team has done a great job. Yeah.
All right, so just to anchor, before we dive deeper into Polkadex, just to anchor it based on something people know. So you start with BitShares, we had Ether Delta, and then I think the thing most people are aware of now is Uniswap. And what Uniswap came up with was automated market making, which solved the big problem, right? Which was liquidity. I remember on Ether Delta, I couldn't. You had to buy the order that was there already, and you couldn't buy as much as you wanted, or like the price you could buy whatever price somebody else was willing to sell at, right? And then Uniswap kind of fixed that with the automated market maker algorithm, but it kind of also created some different problems. So could you go through what Uniswap improved, but what problems it has, and then we can go into maybe how Polkadex is going to improve on those things.
That's right. I think we have to be very, basically the way the progress is always, you have a problem and somebody will come up with a solution which is not ideal, but an extra step ahead into what you really want to get, right? So Uniswap was refreshing because DEXes always lacked liquidity. So there had to be a gaming involved for people to park the funds, right? So since there was no gaming in regular DEXes, people just didn't like it. What's the point going and parking it there other than the fact that it's decentralized, right? So it's very important to attract liquidity through proper gaming. And I think there's a lot of fascinating game theory behind all of this technology, which allows a community and an independent participant to come in and make profits. That's what, basically, and getting a balance out of it. That's what game theory is about. So that, I think it's a perfect example of all these great, ideas which are, built by people. And I think the biggest setback, which I wouldn't say setback because some people are fine with Uniswap, but I think we think that there's a lot more to improve in terms of the issues that it has with front running and, all of those gas fees and many things that people actually want from traditional finance. Somebody who's coming in has to right now adapt himself to make a profit or adapt himself to actually, because the basic motivation is coming in to trade or make a profit. But still, I think it's important to have some sort of a mechanism to exchange value in the same way the value is getting exchanged in traditional finance, right? Even though there's an intermediary, there's no friction. There is friction. I have a lot of friction, but I must say at least the experience should improve to the point where our friends who are not very tech savvy should be able to finally come and start using this. So it is an incremental step, but I think it's going to get there to a point where the entire financial system will rely on tokenized model, which is much more easier to maintain, long term, transparent, and to an extent permissionless, and all of these things, a lot of properties, beautiful properties that blockchain brings in together, right? And combine that with the exchange of value. I think the technology will improve to the point where people are able to tokenize their assets, whatever you have, into tokens and get that exchanged for value, which has been lacking for a long time. And regulators will have to catch up, and they will have to create some sort of mechanism for people to do it, because you cannot illegalize technology, because technology is something out there and there's no point turning back, right? What you invented, it's there. So it's going to happen down the years, just a matter of time.
Yeah, the governments are always scared of some new technology. So I mean, it's natural. I think they're scared of something they cannot conceive of giving up control, and yeah, they don't know what they're going to do. So they're just going to say, it's no, don't do that. That's illegal. And well, how are you going to stop me? Don't.
I think the point is that yeah, I mean, the point is the ability to create value or create something of value is now gone from them. It's gone. I mean, it's not going to come back. But how well it is adapted into the society, it may take time, right? But that ability to create value out of authority, right, or power, belonged to the government. Like they actually relied on the production of the country to actually create value out of it and let people use it, right? But now value can be created through other means, right? So that is something very interesting, how it will play out in the long run. Yeah.
Okay, so just bring it back a little bit. So we were talking about the problems that could maybe be improved on Uniswap. So you talked about front running. So for those of you who don't know what front running is, because Ethereum is a public blockchain, when you place an order, it goes onto the blockchain. Everybody in the pool can see your order there in the pool. And before your order gets confirmed, if they see, okay, this guy wants to buy at this price, he has this much slippage, I'm going to buy before him, pay maybe a little more gas, buy before him, and then sell it to him at whatever his 10% slippage. I'm going to make sure he pays a maximum 10% slippage, or there's some other forms of front running as well. that's the problem there with the stuff all being on the Ethereum blockchain, and there's the high gas fees, so your order doesn't go through right away. And there's some stuff like I like sometimes being able to say, I want to buy this coin, but I don't want to buy it right now. I want to buy it when it reaches this price. And you cannot actually do that with a basic Uniswap AMM algorithm. But on the other hand, I love the liquidity that Uniswap provides with that algorithm, right?
Yep.
So okay, let's say those two problems, right?
I
How
think
can you improve upon that?
right. I think most of the gaming around Uniswap is the profit-making opportunity when there is an arbitrage, right?
Yeah.
So similarly, I think there's a lot of value to be taken from the DeFi space because there's a lot of liquidity, parking mechanisms right now, which like yield farming. There's a lot of ways to generate value out for people who are ready to provide liquidity, right? So people are already using that now. So it's not like before where you simply had no way to get this value out to people. But I think if we leverage that properly, it's now much easier than before, which Uniswap has actually paved the way for show people how to do it. So we just have to follow the same rules. It's possible.
You said Uniswap is popular because it's on Ethereum, but you chose not to build on Ethereum and you're building on Polkadot. Could you explain what drew you to Polkadot? What advantages it gives you over Ethereum?
Yeah, of course. I think Ethereum is a great protocol. I mean, it's a very stable network. You can actually build the apps on it with smart contracts. But when you look at specific use cases of, in our case, like the vision or the philosophy we had in the way that people should trade, it can only be made on a system that is actually built with certain consensus, requirement. But since Ethereum is actually already a consensus network with its own consensus speed and all of these things, you maybe you can actually create a layer 2 and then settle on Ethereum, but that still limits the final throughput of how the people experience these transactions. So creating another network is fine, but if you still keep relying on the parent network to settle these transactions, then again there can be problems. So you're trying to when you look at creating that architecture, the perfect architecture which would solve these problems, as a framework, Substrate looked fantastic because gives you all the tools to create a blockchain from scratch with your own set of consensus speed and the way your own set of algorithm based on what data should be, because it has this beautiful, I mean, I'd say beautiful, but it has this mechanism of runtime and off-chain computation, where generally in Ethereum like space, you basically have to compute everything with whatever you have time that you have within the virtual machine that you're allowed to execute. But in this case, you can actually decide what should get computed within that 3-second or 6-second block time. And if you have more computational intensive algorithms, you take it out, you compute it, and bring it back on another block and still get it verified by the validators or the people who are actually in the network, so that you maintain data integrity. At the same time, you can actually have more complex algorithms computed as part of the blockchain, and verified on the blockchain, even though it's not in the runtime. So these are some advantages that you have when you work with Substrate as a framework, which is perfect for an application like Exchange, which means it's a very complex set of requirement, right? You have the liquidity provisioning, you have this interoperability. There's a lot of data to be checked. There's a lot of writing, and there's a lot of data that actually every point needs to be checked and verified by the blockchain and the system itself automatically. So when you have this system of computing out of runtime and bringing it back, and that gives you the flexibility to actually delay certain confirmation or certain transactions and use runtime for critically verifying those transactions which need immediate confirmation. So, so basically it helps in building a much more complex, application that needs public verification. So that's why we chose. I don't know how far you followed what I said, but if you have a little bit of understanding on how the blockchain is actually used for public verifiability, because that is the ultimate goal of using a blockchain, right? You're publicly verifying what you're doing. So you're publicly telling everyone that nobody can cheat. It's a game where nobody can cheat. So that's what you use it for, right? So Substrate gives you a lot of control with that.
Okay, so just let me make sure I understood you correctly there. So Ethereum and Layer 2 is what they do is the Ethereum on-chain computations too expensive. So they say, okay, we're going to do all the computations on the Layer 2. And then once you want the security of the main blockchain, you can say, okay, I've done the computing. Now I'm going to move the proof of the computations, move it back to the Layer 1 to Ethereum. And that's how the Layer 1, Layer 2 works, the bridging back and forth in that, right? So you're saying on Substrate, you don't have to bridge to a Layer 2. You can say, within the one block, you don't have to. You're not forced to do all the computations right away. You can say, okay, this is what needs to be done right now in this block, and let me give you an IOU on the computations that I'm going to tell you later on. I'll come back in a few blocks and tell you, and then the Substrate will say, okay, yeah, sure, I'll check back with you in a few blocks, and then is that how it works?
Yeah, right. Sort of. So you have this validators or the kind of equivalent miners that are part of the network. So you can get these computations cross-checked by each other, and even if it takes time to verify that, it's fine. So you can have more meaty transactions or meaty computations to be done off-chain with them, and then they can actually cross-verify whether nobody has cheated, and then finally confirm it on the blockchain. So I think it gives you a real-time layer 2 advantage when you use off-chain workers in Substrate.
Okay, and you don't have to do any bridging back and forth, wait 7 days.
No.
None of that. No. Okay. By the way, for those of you who are just joining us, we're talking about DEXes. We're going to dive a little bit deeper into Polkadex. And speaking of Polkadex, don't we have some kind of giveaway today, Aperture?
We actually have a giveaway. So what you can win today is in total 10,000 of PDEX. So it's actually a huge prize. The only thing I can say is keep watching the screen, because we have that giveaway code and it will be flashed on the screen. So don't take your eyes away, because you want to take part in this.
So that's I think it's $1,000 of PDEX to 10 winners, right?
To 10 winners, yes.
Okay, so make sure you watch the screen there once you get the code. In fact, why don't we flash the code right now, actually? So so you get the code, and you will have the giveaway link in the video description. So you go ahead and click that Gleam link, put that code in there. It's on the bottom of your screen right now, bottom of your screen there, right? Put that in the Gleam, and you will get a chance to win one of the 10 prizes, PDEX token prizes. So if you win, right, or even if you don't win, well, you probably want to know, okay, what is this? What exactly is this PDEX thing, this Polkadex, and how it fits into the whole scheme of things? So let's dive a little deeper into Polkadex. Let's see. So we talked about why you chose Polkadot, and I think what's unique about Polkadex is you guys have an order book, right? Can you explain a little bit like how that works and what advantage that gives you?
Right. Order book is kind of very used. People are used to the order book interface. If you go to any centralized exchange right now, you can see how the order book works. You have a sell order and buy order side, and you can basically place limit orders, market orders, and you can even have set limit orders. You basically can what do you say, get out of an order in case the price goes below a certain level. So there's a lot of functionalities that is given by order book based exchanges, which people are still comfortable with. So we don't really have uh, an order book based DEX with the same functions of centralized exchange, with proper response, with the close that we have is Solana right now. But even that is actually on a 500 millisecond, confirmation. That it's very fast, but still, it's still not up there when it comes to centralized exchange. If you've traded with centralized exchange, you will never like to trade in a DEX that is actually giving you less time of response and how it interacts. So our goal is to actually take this to the point where you experience the same kind of interface and speed as you would do in a centralized exchange. At the same time, the transactions remain peer-to-peer, and you don't lose custody of the funds. So that's the goal. And what do you see? The interface that you see on the screen, it's going to be the same unless there is additional improvements from the designing side, but it will look the same. And you can see the buy orders, sell orders, and everything. So it just there's no order book right now which is peer-to-peer with the kind of speed, but we do have derivative exchanges, but there's no DEX that actually gives you native tokens to be allowed, that's allowed to be traded. What I meant by native tokens is not wrapped, I mean genuine. I mean basically the tokens that are not wrapped, not the colored tokens. It's actually the proper, which is bridged directly to the main chain. So that's something that we are trying to achieve on the order book. Plus, I mean, on top of that, if you add the gaming that I mentioned before, where you incentivize people to park liquidity, which I'm not disclosing right now, there's a mechanism for that in Polkadex. That will actually allow people to park their funds and earn an interest, right? So it's similar to how yield farming works, or any sort of liquidity farming works. It's basically incentivizing people for parking their funds, which means that liquidity should automatically flow into it. And people who don't want to trade can just sign their wallet and just keep it, still not losing the funds, but you are letting that funds to actually be used for, many things without losing control of the funds. So it may look magical, but it's basically authorizing the transactions, but you're not letting the party to take those funds without your consent, without your signature. But until then, he can actually use it for certain activities, which means that they cannot take away the funds, but it can be used for certain activities. But you still remain in control of the funds. Whenever you need it, you take it back. So that's also kind of unique in Polkadex when it is launched.
So you're saying you're going to be able to give a centralized exchange-like experience in a decentralized environment.
Exactly.
Okay, so that's going to be pretty impressive if it's,
yeah,
a lot
that's
of
what you're trying.
frustration.
That's why it takes time.
A lot of the frustration I get with Uniswap sometimes is, it's a good trade. I want to get into this trade now. And then 2 hours later, it's not confirmed yet. And then the
you want to
moment's
trade
long
and
gone.
You want to send like 1,000 transactions in a second. I mean, you can't do that in DEX, right?
I think I had exactly that problem like yesterday on one decentralized exchange that has the Uniswap model. And I want to sell a coin because it was going up fast, and it said like there's no liquidity first, but there was liquidity. The pool was open, and then I couldn't sell because the price was moving so fast. And if you have a interface like this and it functions like an actual exchange, we know That's amazing. And you have best of both
Yeah.
worlds, like the interface from the more traditional exchange, but you have the security from the decentralized exchange. So yeah,
Yeah.
nice.
And the good thing is it's basically secured by protocol, right? So it's a whole difference, right? You can see your funds moving, so it's secured by the protocol. If you bring the funds, you can see it. So it's there. So it's not like, in a centralized exchange where you don't know like how, because they move it. They immediately, the funds get moved when you deposit, and you basically don't know what's going on until you click withdraw and get it. To an extent, you can watch their cold wallets. Yes, I'm not saying you cannot, but still, there's more, more. If I mean, you have to perfect this protocol. I'm not saying that it's going to be like the perfect. Once you need to go through a little bit of security audits and stuff like that. But once it's ready and once it's really working, it's going to be like you are dealing with the protocol level trust when you're committing to trades and getting out of trades. So that's a good thing. That's a value addition as far as we think. I think it's going to. I mean, yeah, I think people
Yeah,
like it.
I think that's a really valuable point here, because like the crypto natives are always looking for decentralization or code is law, and I think that's the point
Yep,
you're making here. Code
exactly.
is law, and you can check that, and if it works, it works, and you don't, at least not somebody's doing shady on an exchange you don't really trust, like maybe trading against you or maybe shuffling funds around you don't actually know about.
Big point.
Yeah.
Very good point, because you can't put fake volume here. What you see is what you get.
Yeah.
Whatever
Yeah.
you try, you can't put fake volume. That's, everybody can see it.
Yeah, and this is how you don't trust but verify. You can actually verify what's
Yep.
going on here. Important, really.
I notice here that you have it's not just Polkadex, as you have Ethereum and Polkadot. So is this going to be like a cross chain? You said there's no wrapping involved, but you have multiple chains here. So is it going to be cross chain,
Yeah.
and how is that going to work?
Yeah, it's something that we are developing internally. Of course, it'll be open source, but right now it's a private repository. We are working on something very unique. I don't think it's kind of utilized in any DEXes so far. We want to bridge it in a native way, the tokens, and make sure that the experience is similar. At the same time, you're basically settling directly on the native chain. So Ethereum, when you transfer it, you're basically transferring without any sort of wrapping, in the sense you don't need to hold Polkadex tokens to. In generally, what happens in wrapping, right? You have to hold the other token, and then you bring then you transfer your Ethereum to that particular token through a bridge, and you have to hold that particular chain's token. Then you create another Ethereum, then you move that Ethereum to the final destination, right? That's how the wrapping mechanism works. Generally, the burning
Yeah.
and the wrapping and kind of thing works. But here we don't have that. You don't need to hold anything. You can just click and deposit. That's what we're trying to achieve. And if it works, it'll be beautiful. Like it's just straight forward integration.
So
Yeah, like you'll be given an address to
yeah.
deposit, and that's it. You just deposit. I know it's just confusing for you. I think we'll release it by the end of I think by December. And once everything goes for audit, everybody can see the code.
So wait, what do you mean? Do you mean like if I'm on Ethereum and can I place an order on Ethereum and then receive
No.
some
I'll give
assets
you the
on a different?
experience. The experience would be that, just like how you have a deposit button, you have a deposit
Yep.
button. You click on the deposit button, you'll be given an Ethereum native address to deposit. So wherever your asset is, you deposit that asset. It doesn't matter whether it sits on Polkadex or a compatible chain or any chain. It can be even exchange address. You just transfer the Ether, whatever you have, or ERC20. It just gets deposited into this address. Okay, and that is actually there's no wrapping. So immediately it just gets credited to that user's account, and you can start using in that same wallet that you're actually put the signature for. It's available in that wallet.
Okay, so
Did you
so
get
you're
it?
saying that if I want to trade on Polkadex and I have funds on Ethereum, I don't have to say, oh, bridge funds
Nothing.
over. You just say, get an Ethereum address, move your funds from one Ethereum address to another, and then it will become available inside the Polkadex
In Polkadex,
ecosystem
yes,
on your
that's right.
account. Oh, I like that. Yeah, I
Yeah,
don't.
basically the bridging that is done by people to move these things, right? It's taken care of inside the blockchain. That part is actually inside part of the blockchain. So that's eliminated. Like for example, you have wrapped tokens, right? You wrap it so that you make it ERC20 compatible, right? You
Yeah.
make some other token ERC20 compatibles. That way you can actually move it around in the Ethereum ecosystem. You can trade on platforms that support Ethereum. Agree, right? So that way, that's already taken care of inside the logic, where it just becomes part of the Polkadot ecosystem. You can just wrapping. I mean, there's no wrapping. Basically, it's like directly, part of the integration. You're basically talking to the Ethereum network here. You're talking to the Ethereum network directly. The Polkadex network is talking to the Ethereum network directly.
Okay, so basically there is communication between two chains
Of
involved,
course.
but
Yeah.
you don't have to. You as the user don't need to worry about that
Worry about
anymore.
that. Yeah. Nothing.
Which is what actually happens inside a centralized exchange.
Exactly.
I
mean,
I deposit ERC20 USDT, and then I don't have to worry anymore whether it's going to be like I can withdraw into another network, and then the centralized
that is
exchange
true.
takes care of that for me. But on
That is true.
Polkadex, then I don't have to do all this manual bridging, like, oh, which bridge should I go to?
Nothing.
Which one has the best gas? Which one supports my coins? It's all going to be done automatically. Yeah, I love
Yeah.
that.
And
That would be
also
a
here
dream.
we are going to roll out Bitcoin as well, where you have Bitcoin native integration, where you'll be presented with a Bitcoin address. You deposit the Bitcoin, and it just comes here instead of wrapping it and then bringing it over, because there's no ecosystem here, right? It's like, so the Polkadex, I mean, the platform takes care of that wrapping for you. There's no external wrapping for the token. It just comes inside. So the experience is like
Great.
very simple for people who want to use it. Like suppose they're using already trading, it's not confusing for them, right? You tell them to, okay, change that token to something else and bring it here. Then you have to educate people to do that. There's no point. Then there's no point building this, right? So
And
the
then
point is
change it
actually
back as well.
of course, yeah, just withdraw it back. Yeah, it'll end up directly on the Bitcoin chain. Yeah, just
and then worry about liquidity pools for the wrap tokens, and then liquidity for the unwrapped
nothing to
tokens.
worry. And the fees also will be like, we are trying to eliminate all that. Yeah, it's a lot of it's very interesting. I think it'll be very interesting once people start using it. But we need to get the protocol security and everything right before we launch.
Oh yeah, I would love to be able to do that.
Yeah, I'm waiting for this personally. If you ask me, yes, we just, because there's something we need to use, right? So
okay, so we have the order book, and you have cross chain functionality. I read somewhere that you have bots. How are you gonna get bots onto a DEX?
Yeah, because we have created a near native interface through a TE layer, which is called a trusted execution layer, where you have a computation happening, a part of the computation, the order book computation happening on the TE, or the only part that is actually running on TE is the order book side of things, which is to make that transaction and the performance and the experience excellent for the user. At the same time, the operator is not able to take control of the funds, right? Anybody can run the TE, but like they don't have access to the funds. But when you bring in the TE, it changes the picture, where you're, instead of interacting with the network in a decentralized network, generally in blockchains or DEXes, instead of interacting with the network and waiting for the broadcast times for acceptance, you are interacting with the hardware directly. So when you interact with the hardware directly, it's like anybody can connect to the, connect bots, and it just works um, exactly like how it works right now with the exchanges. So they can send hundreds and thousands of transactions, cancel it, send again, cancel it, send again, without gas fees or anything like that, because that's how bots make money, right? It just goes through different algorithms. You place a trade, and then after some time the situation changes, cancel the order, check for the algorithm, again place the order. So it's just a complete repeat and recycle of the same thing over and over again. It just doesn't work on DEXes because it's too expensive. So we need to open up that channel for people so that there is liquidity. At the same time, don't allow people to hold custody of funds, and let them retain custody of funds. So it'll be slightly different in the way that they operate, in the sense that they have to put a signature and allow this transaction to go through. Each time when they place a trade, you don't have to sign. You authorize. Like, we created a different sort of architecture to smoothen that out, that friction of signing the transaction. That's again substrate cave. So it's like very. I think we have completely utilized what substrate has given as a framework to create these little experiences that will make a big difference eventually when a user tries to use it, right? Because you don't want to. Right now, you have DEXes where you sign the transaction each time, right? That's kind of a boring. It just takes the fun away from trading. So how to eliminate that, right? So again, we use something like there are certain systems in substrate that allows you to create such accounts, which limited control, where you give a sign and then afterwards it just takes over, but that particular account cannot take the funds out. So there are certain systems like that available in substrate. We just utilized all this. So I think so I would say it's just a part of technology, how it evolved, and now you have the tools to make it happen. So that's why I'm really proud of people who built it, because it's built with a great vision, where they saw that there will be use cases for these things, and they built it out there as a framework so that developers can actually access those tools and create applications which was not there before, which is what is happening right now. So if we don't make it, somebody else will make it in the future. So it doesn't matter, right? So these are available in the framework. So we made use of it so that you don't have to repeatedly sign, and you can actually place orders from a mobile phone, which is cool, right? That feature allows you to do that without your hardware wallet all the time with you, right? Just suppose you want to travel, you're traveling, and you still want to use those funds to place orders with your mobile phone and internet. You should be able to interact with this. That's how people will want to use it. So yeah.
Okay, so when you say the bots here, then, so do you mean like the way it works in a centralized exchange now is I get an API, I put that API into my bot, whether it's a third-party bot or I host it in my own computer. So it's going to work the same way on Polkadex?
Yeah, exactly. But the login procedure will be different. That's all. Yeah.
Okay, and
there
because you don't have to sign.
Yeah, that's right. You have to. It's a one-time process of identifying your wallet and yourself with a signature. And once you create that account on the mobile phone, it just works. Then you can just trade without the signature next time.
Well, normally I actually like being able to sign on Ethereum because of the crazy gas that I don't want it to automatically use all my Ethereum in like, 2 transactions, right? But how's the gas work on Polkadex?
Well, I think of course, once the asset is settled, then you need to withdraw it to the native chain. Suppose you want to withdraw the Bitcoins you traded back to Bitcoin, then basically the what you pay is the Bitcoin transaction fee. That's it, nothing else. Suppose you want to move that fund from that wallet to another wallet which is sitting natively in the Bitcoin chain, then you pay a basic whatever that is part of the parent network. So so that's how it works. And in deposit, we are trying to avoid that fee by certain crypto economics, which again will be revealed when the product launches, because there's a cost that needs to be absorbed, right? So if you want to make that experience same, somebody has to bear that cost. So we're also working out certain mechanisms where the deposit can be free for all, right? Which is kind of cool, or at least very, very minimal or something, or some sort of, we're trying to do that. We're trying to achieve that. But even then, otherwise, so these deposits and the withdrawal are the only pain areas. But otherwise, inside the order book transactions are kind of, there's no fee for, matching the orders because it's done in the TEE. And, so there's no fee other than what you have on the trading fees that we have placed on the order book, which actually allows the operator to maintain the TEE and gets to pay that expenses of running that operator.
Okay. And just to be very clear here, so you're saying that because you can allow the bot to trade without giving it withdrawal permissions on Polkadex. So I can say, hey, Aperture, I like the way you trade. I'm going to let you use your bot to trade using my funds, and then he can take care of my funds and trade for me?
Yeah, that's a feature that that's an additional feature that we are planning to build in, which will allow people to delegate their funds to, bots and, other people, which will let them trade for you, right? They cannot do anything other than trade. So that's another cool feature that we have. Yeah.
So it's
it all works with signatures. Yeah, right. So you still don't let the other person to withdraw those funds. They can make a false trade, but then there can be gaming, there can be gaming actually programmed into it so that there's incentive for the person to actually make a good trade, right? So that there's more incentive to actually make a good trade than make a bad trade, and then the maximum what he can, lose is like a bad trade, a little bit of here and there. You still end up with some asset on the other side.
Yes, right? Because you can see the on-chain performance. That's where reputation comes into play, and you can easily backtest what's happening. So other players will definitely look at the better players, and I think it's a natural competition evolving from that, right?
Yep, that's right.
That's nice.
So many things like that you can do with this, where people have incentive to participate, which is not there in DEXes before.
Okay, and I assume probably let's talk about the token actually. So because I was thinking, okay, how are you going to incentivize people to trade, use their algorithm on your bots? So immediately what came to mind was, okay, probably you're gonna incentivize with the PDEX token. So could you maybe tell us what uses are there for the PDEX token on Polkadex?
Yeah, of course. I think PDEX token is basically used everywhere, right? Even in, for example, obviously for transactions, there's a small but very minimal, there's a transaction fee. And then we also have a portion of there's an interoperability, palette in Polkadex, which takes care of, like I told you about, native bridging. So for the transactions that are coming in, there's a mechanism to actually keep paying the treasury for funding, incentivizing people in the future. So we have designed it in such a way that there is a perpetual way to reward people by, taking a chunk of the revenue and just pushing it into treasury. So that way, you can actually, even though the treasury is actually burning, by itself. I mean, I'm not saying it's automatically taken care of. There's an inflation which is taken care of by itself. But when treasury has revenue, it means that you're creating something as a perpetually earning system, right? Instead of simply keeping on giving away tokens, there's a limit to which you can do it by inflating. It's like the state printing money, right?
Yeah.
Many people do that still, even though they say that, okay, we don't like the state printing money, they keep letting the blockchain print money. So unless you create value, right, just like the production of a state, you need to create value from the blockchain where the treasury gets some revenue from the activities that are going on in the but in most chains it's like transaction fee, right? And that's how the because if you look at Ethereum, it is a lot of use cases where transaction fees paid is humongous actually, so people are incentivized to actually to participate. But in this case, you are creating value from this interoperability and transactions and all of these activities that are happening. Even there are a couple of other products that actually is bridged into this blockchain, right? Like the Polka IDO and the Polka pool. Completely, the 0.3% is actually being incentivized to the people. So there's a lot of value addition and velocity for the token, where there's so basically there's demand for the token for these activities. Everybody needs token, right? Any activity needs token. In Polka pool, the swap needs token. In IDO, you need to lock tokens to participate. And even though it's very, very low, like it's part of the governance, they can decide how much to lock, but still it has to be locked or it has to be used for every activity, which means that the token is it's a high velocity token. So naturally there is a demand for the token, and naturally there's people who wants to secure the network is incentivized because there's demand for the token. They want more token, so they want to secure the network. So that is an incentive for the validators to come in. So even if the inflation reduces or at some point there is more incentive for people to come in and join, because there is some real use case happening on top of this, right? Just like, because Ethereum is a perfect model. Like if you look at it, there's a use case. That's why Ethereum has value. And in Bitcoin's case, is the actual value proposition that is actually giving it value, like storing wealth. So there should be something to actually create value in blockchains. Otherwise, this rewarding mechanism can fail at some point, with just keeping on inflating it.
Okay. So you said, so there's not just a DEX then. You have an IDO platform.
Yeah. Right.
What else here? NFTs. Teams can issue their tokens. There's a lot more to the whole project than simply the DEXs. We're kind of running out of time here, though.
Yeah, it's created for actual use cases which are needed for an order book to function with enough liquidity, right? So basically, the what we are building is actually on a 10,000 feet view or an overall perspective. It's exchange of value, right? So if exchange of value needs to happen, people need to bring in value here to exchange. There has to be incentive for people to actually, put that value in, to take that value out. So these are actually, the ecosystem, part of ecosystem building that we have created these things, which is built into the protocol so that, anybody can actually take it and run it. But I think we'll kickstart a few from our side, and if others are interested, they can join.
Okay, so can you just talk real quick about your immediate plans for the future then? I see you have margin
Yeah,
futures.
I think exactly right. I think next week we have we'll be rolling out the plans for the Q3, Q4, because we're expecting the solo chain to parachain migration palette ready. But since it's very closely linked with the development from the Web3 side or parity side on how to get the solo chain to transfer to a parachain, so since it's not ready yet from their side, so we're waiting for that. And the moment it's given a green flag, we are working very closely with them, and we're even ready to that's also we're planning, ready to provide resources to actually make it happen faster for them if required. So only when that is ready, we can actually go for the parachain. So we're waiting for that to happen. So we're working with the parity team very closely to to make it happen. So the way it's looking right now, they're kind of busy with the auctions, but there are projects out there who's waiting to have this conversion happen. So it doesn't necessarily mean that we need that conversion to happen for the product to function, it can still exist as a solo chain and still have everything rolled out within our control, whatever we have in our control, which is the order book and all these products. It will all get rolled out regardless of whether we have that bridge ready from the parity side. But the moment it is ready, we'll be connecting it as a parachain. So we're waiting to hear back from them. We're working very closely with them. So that's why most likely the auctions at Q4 may get pushed to the next month or something, depending on what we get from them.
Okay. So your parachain, depending on what parity releases, then once they
basically what's
release
happening
that,
is right now we have a solo chain, right? So it's not like we because since we had all this logic in the solo chain or the chain that we're building even before the parachain is ready. So now we cannot depend on this to build our core logic. So that's the reason why we launched our own solo chain, so that whatever we build is ready to go. Like order book is ready to go whenever we are ready with the logic. And it's not dependent, because there are two sides to it. One is the parachain, and then we have the logic and whatever that we are building. So if you couple it too closely, link it together, you simply don't launch the project. It's like it may indefinitely wait. So we took a strategic decision of, creating and launching other, so that we don't have to worry about whether we can launch. Like, we have investors, we have people waiting for their product to come out. So strategically, we thought it's better to have our own chain to launch everything and just get kickstarted before we, so that by the time this is ready, we can convert that to a parachain. So this conversion process, changing the solo chain to a parachain, that's what we're, waiting for.
So can we trade? Can we start trading, or when can we start trading?
You can start testing the trades or how the look and feel of how everything looks like by the time the order book goes for audit. Then audits are beginning on January 3rd. So before that, everything should be released and people can actually use it.
Okay,
Not
so
as a
then
real
maybe
exchange, but with the test network. You can see the interface, how the bridges work, and how the orders can be placed, and how it can be canceled, and all of that. Basically the whole user interface should be ready.
Okay, so within maybe like a month or two, you can start testing out.
No, a month actually. By the end of December is what. Yeah.
Okay.
Yeah.
So within a month, you can start testing out the UI.
Within a month.
And then after that, the basic order book, then you can start having the futures and the margin and lending, and then all
that
stuff,
may get
right?
again pushed a little bit further, because this is very important, right? And then first thing is about the security of the protocol, which needs to be done through, probably we may have some bounty programs announced for hackers to come and just help out. They can just do whatever they want right now, and then make it more robust. So most likely, I think once the audits are finished in January, we can launch it by the end of January or early February, or so the order book should be going live.
Okay, let's say
actual product.
We're running out of time here, so let's say I watch this stream. All right, I'm sold. I'm very interested in what you have to offer. How do I participate? How do I get invested into Polkadex?
Well, the way to participate is by joining the network and trying to secure it and be part of the ecosystem, right? That's the biggest, that's the best way for you to participate, by securing the network right now. So yeah, I think you can then get used to the whole Substrate ecosystem, like how to use the wallet, how to run a validator, how to nominate validators, and all these 9 yards of how to get to know about how to be part of that network, and reading how the blockchain works and how the logic works. So as and when releases happen, then you can actually be part of the beta testers program, where we release our first iteration of the product to a select group of community members, and the feedback coming from there will be used to fix the initial bugs, and then only then it goes to the test net. So we have 3 phases. One is the beta testers, then it goes to the test network, then it goes for audit, then it goes to the main network. So that's the phases that we take the product through.
Okay, and I guess you have these links here, so I guess you can follow them on Medium, YouTube, Twitter. Reddit, Discord, Telegram. There's a big Telegram button there, so I'm assuming that's the place to go. And I think you can find the PDEX token on KuCoin, should be where most of the volume is. I think there's some on...
I forgot to mention about I think we are also planning to make migration easier for everyone. For some people, it's a little too technical. So we are working with the exchanges to make that happen. So most likely, I think once more exchanges start listing our native token, I think it should be easier for people to migrate and then have the actual tokens and use it for, staking, or there's a lot of utility coming up for the token, which is great, which is like I mentioned before, right?
Okay, so if you want to get that before the utility comes, you can get it on KuCoin Uniswap, Gate.io, I think, and then you can, if you want, you can transfer it to the mainnet and then get ready for the staking and the any additional utilities that are planned. Okay,
right.
That's all the time we have today. Thank you so much for showing us all these, and I'm pretty excited to get to use this. It's going to make my life a lot easier if I don't have to do all the bridging and like market buy and that kind of thing. So I hope you guys release this tomorrow so I can start using it.
The only delay is because we have the order book should be ready, and then you need to have the liquidity bridging as well, right? That's why the interoperability is important. So we're going to release it as a product only when that is also ready. But that again, everything will go for audit in January, and by then people can see how it works.
Right. So stay tuned to their Telegram to make sure you get the announcements for when that comes out, so you can test it as soon as it happens. Make sure you join the giveaway. 10 people are going to share the $1,000 worth of PDEX. So use this code, enter the link, enter the code there, and then you'll be able to join the giveaway. Make sure you join our trading congress. It's the last day, but we have some special prizes that maybe you want to be aware of, that you still maybe have time to join. And make sure you like and subscribe to the BirbNest channel. And stay tuned for our final stream today.
Yes, the most important.
What's going to happen there, Aperture?
What's going to happen? I think a lot is going to happen. We're going to, of course, thank a lot of people for attending our congress. We're going to do some technical analysis, some forecasts, like the whole team can give opinion. We will discuss all these forecasts and where the market is going. And of course, we will look back on the congress itself. There's room for questions, a Q&A session. And of course, there will be these giveaways and some live announcements you don't want to miss.
Yeah, probably something you don't want to. Black Friday. Did you hear that? I heard. I don't know, guys. All right, so stay tuned for that. All right, and catch you guys in the next stream. All right, bye, guys.
All right, thanks, Michael, David. Pleasure having you. Bye-bye.